The silver price pushed to yet another record on Wednesday, surging past the US 90 per ounce mark and reaching a new all-time high of around US 92.20 per ounce. The move extends a powerful breakout that began earlier this month and underscores silver amongst growing momentum amid a volatile global economic and political backdrop. The latest rally builds on gains that started on January 9th, when silver began climbing sharply against a backdrop of mixed economic signals, rising geopolitical tensions involving Venezuela and Iran, and persistent strength in industrial demand. Investors have increasingly turned to the white metal as uncertainty clouds outlooks for growth, monetary policy, and global stability. Expectations for a lower interest rate environment have added fresh fuel to silver's advance this week. Those expectations intensified after a rare and highly sensitive development in Washington, where the U.S. Department of Justice on January 9th served the Federal Reserve with grand jury subpoenas related to Chair Jerome Powell's testimony before the Senate Banking Committee last June. The move has raised concerns that President Donald Trump's long-running dispute with the Fed over interest rates may be entering a more confrontational phase, although Trump has said he had no knowledge of the Justice Department's actions. Powell's current term as Fed chair is set to end in May, though he has 2 more years remaining as a governor on the Fed's board. Trump has repeatedly criticized Powell for not cutting interest rates aggressively enough, and investors widely expect that any successor chosen by the president would take a more dovish stance on monetary policy. The Fed's next rate decision is due on January 28th. According to CME Group FedWatch tool, markets are currently pricing in a strong likelihood that rates will be held steady, despite recent inflation data showing further cooling. Core consumer price index data for December showed inflation rose by a lower than expected 0.2% month over month, with annual core inflation at 2.6%. That data has reinforced expectations that the central bank could move toward easing later in the year. Analysts say the perception of political pressure on the Federal Reserve has become an important driver for precious metals. Karsten Menke, head of Next Generation Research at Julius Baer Group, told Bloomberg that increased interference with the Fed represents a key bullish wildcard for gold and silver in 2026. He noted that because silver is a much smaller market than gold, it often reacts more sharply to concerns around monetary credibility and institutional independence. Silver and gold typically perform better in lower rate environments, as falling yields reduce the opportunity cost of holding non-yielding assets. In recent weeks, that dynamic has worked strongly in silver's favor, with the metal now significantly outperforming gold in percentage terms. Silver is up close to 200% year over year, while gold has risen by roughly 72% over the same period. Gold also reached a new all-time high on Wednesday, briefly touching around $4,641 to $40 per ounce. While gold has provided stability and steady gains, silver's smaller market size and higher volatility have allowed it to post far more dramatic price increases during the current rally. Beyond interest rate expectations, silver's breakout in 2026 has been driven by a range of additional factors. Like gold, silver benefits from its role as a store of value during times of economic and geopolitical stress. However, its surge late last year, when prices jumped past the US $50 level, was also linked to a temporary lack of liquidity in the London market. Although those liquidity issues have since eased, the silver market remains structurally tight. Silver continues to face a multi-year supply deficit, with mine output struggling to keep pace with rising demand. Trade and tariff concerns, along with silver's recent designation as a critical mineral in the United States, have further supported prices by underscoring its strategic importance. These supply-side constraints have made the market particularly sensitive to shifts in investor sentiment. Silver's industrial role has also become an increasingly important part of the story. According to the Silver Institute, global industrial demand for silver is expected to grow steadily over the next several years, driven by expanding use in key technology sectors. Demand from solar energy, electric vehicles, and related infrastructure, data centers, and artificial intelligence applications is projected to rise through 2030, adding long-term structural support to prices. As both a precious and industrial metal, silver sits at the intersection of safe haven demand and economic growth trends. That dual identity has amplified its price movements during periods of uncertainty, as investors weigh both defensive and growth-related considerations. Looking ahead, analysts are divided on how far the rally can extend, but many believe silver could continue to outperform gold this year if current conditions persist. Some market watchers caution that silver's rapid rise leaves it vulnerable to sharp pullbacks, particularly if expectations around rates or geopolitical risks shift. Others argue that the underlying fundamentals remain strong enough to sustain elevated prices. Doug Casey of International Man, Com said in a recent interview that he sees silver's new highs as potentially durable. He noted that he views silver as a long-term asset rather than a speculative trade, adding that further upside, including a move toward $100 per ounce or higher, remains possible. Casey emphasized that his outlook is rooted in silver's role as a store of value rather than short-term price targets. For now, silver ES surge above his $99 marks a significant milestone for the market and reflects a rare alignment of monetary, geopolitical, and supply-side forces. Whether prices consolidate or continue climbing, silver has firmly established itself as one of the strongest performing assets at the start of 2026.